Would you agree that money is the most valuable tool in modern society? Well, then why does our education system teach us absolutely nothing about it? When I was in high school, I was taught subjects like math, science, and English. And don't get me wrong, those subjects are extremely important. But isn't it strange that I was taught absolutely nothing about the thing that we agreed to use as a means to establish value? And for those of you that are like,
dude, you're being a little dramatic here.
Am I really though? Did you know that 73% of Americans rank financial stress as their number one cause of stress in their life? And Medical News Today states that those with financial stress are 13 times more likely to die of a heart attack. I don't know about you, but I don't think the lack of education around the subject of English is a direct contributor to my health. Now, you English majors, relax. I'm not saying English isn't important. I'm just saying financial literacy is just as important as English is. I mean, we're in America, right? Where it's the land of the free, yet the traditional school system taught us absolutely nothing about how to be financially independent. I mean, I find it strange. Financial freedom is achieved by acquiring assets. And the good news for you is I'm going to teach you one of the basic fundamentals to acquiring assets, the stock market. But enough with the fancy intro. Let's jump into it. This is how the stock market works for beginners. Back in the 1600s, a company called the Dutch East India Company set out to sell goods like gold and spices. However, the East India Company was faced with a huge problem. They didn't have the finances to actually fund the voyage and pay for the employers and even the ships themselves. So they reached out to civilians to ask if they could fund the voyage. In exchange, they'd be given a share of the profits. By doing this, it gave the East Indian Company even more ships, employees, and even goods than they even expected, which resulted in the voyage being extremely successful and out-earning well beyond what they even imagined, which made the East Indian Company happy and the investors themselves. With this wild success, the Dutch East Indian Company began to continue to sell shares of their profits all around the world, and before you knew it, they invented the first stock market. Today, the stock market has grown immensely, making it far more complicated than what it was back then. I mean, today we have careers based strictly on understanding the market because it's grown so much.
Okay, so then how does it work today?
Let's say there's a new water company who wants to launch on the market. First, the water company would advertise to private investors. If the private investors think that the water company is a good idea, then they have the ability to invest first by sponsoring the company's initial public offering, or what we call in the investing world, an IPO. The IPO then launches the water company onto the market, where corporations and individuals who believe in the water company now have the ability to buy stock. When a corporation or individual buys stock, it makes them partial owners of the company. In exchange, the company then uses the money that the investor paid to promote the company and to try to continue to grow in revenue. In short, become more profitable. As the water company becomes more successful, people begin to buy more and more shares. As the demand for the shares increases, so does their price, which also increases the prices of shares already owned. But before you go ahead and click the buy button, shares don't just go up, they can also go down. If the water company starts to seem less profitable, then investors will then sell their shares in hopes to maximize their profits before the cost of the shares goes down. The reason this is done is because the more shares that are sold of the company, the less the demand for the company there is, making the shares less valuable. I mean, people do sometimes sell shares for personal interest, which also does make the demand go down as well, which can leave investors with big losses. That is, unless the company can start to look profitable again, which does happen sometimes. In other words, the stock market is just one giant game of supply and demand. When people invest, they take into consideration things like production technologies, the ever-shifting cost of labor, changes in leadership positions, bad publicity, or larger factors like new laws. Human emotion is everything in the stock market, as it has the ability to trigger economic booms to financial crisis. With that being said, this is why financial experts promote long-term investing compared to trying to time the market and make some quick or fast cash. If you made it this far, chances are the stock market has your interests, and the good news for you with the dawn of the internet is that average people like me and you have the ability to invest the same way that the big-time investors do, which gives people like you and me the opportunity to achieve our own individual financial goals. So the question is, when are you going to get invested?